You can put a lot of money to work very quickly. People are sort of voicing that they think that a recession is already priced in to some degree, and if they need to change their mind, they can get out relatively quickly. So I think the market's underestimating the liquidity benefit of this subset of stocks, and also assuming that they can figure out a way to grow their way out of this, even if GDP expansion is less than stellar. But I think, again, there's another characteristic that people like. People want to own things or have some exposure to things that can have multiplicative returns. They don't see that in value stocks, and so they like to chase some of the more tech-driven names. And today is a huge risk-on day, as represented by the NASDAQ and the VXX.
Well, that certainly makes a lot of sense what you're saying, because such a difficult year for risk investors that when you have a day or you have a week or 2 weeks or whatever this turns into, maybe we see new all-time highs. It doesn't seem likely, but that could certainly happen. Investors want in, and they're going for the most momentum, gamey qualities possible. With the XLK, you have a great point, though. Implied volatility is down, suggesting that this run may just continue.
Yeah, I think more so in technology than anywhere else, we're seeing the sort of theme that in 1990 in 91 you had the sort of bounce out of the recession there, and people are referencing that in the last couple of days. We had the market down about 13% prior to the last couple of days of rally, almost as if they're using that as a playbook to what a recession looks like. I think that this is a little bit short-sighted, maybe too narrow, considering the geopolitical situation we're dealing with. So I like taking an opportunity here to get long XLK volatility as it's gotten smashed over the last couple of days while equities are rallying. And if you look at this in juxtaposition to the S&P, the S&P is up today, but implied volatility is up on the S&P too. So it really stands out as something that's moving independently, and maybe there's a lot of belief that tech companies can figure out a way to survive this in a way that others can't. But I think it's a good opportunity to get long vol on ETFs like XLK or other technology names specifically. And the last thing I'll say too is that in an environment of rising rates, particularly on the short end of the curve, it's now a good time to be an idiosyncratic stock picker. There's more focus on long short because short positions actually have some positive yield with rates higher, and it's really changing the landscape of investing a lot. So all in all, I think tech is charging out of this as if a recession is already priced in, and volatility is getting crushed. And I think it's an opportunity for people to take a measured step into getting long vol on technology.
Well, that chart we were just showing of the VXN relative to the NASDAQ 100 would probably make that case, given the gap, and that history suggests that at some time they will reconverge. Very, very quickly, Matt, in about 30 seconds or less, bring the Fed into this conversation, because it seems as though they will be the driver as to whether or not you want to buy that vol or not.
Yeah, I mean, that's the big question, right? Powell's comments yesterday were almost as if to say, is nobody paying attention? Did nobody hear what I said? Maybe I should say it more forcefully. I think a lot of people in the market said it was a more hawkish response than what was expected, followed up by the comments today from Dallas. I think that the Fed is going to do what the Fed needs to do to stem inflation. Whether we can actually get inflation under control and continue to grow is the big question. And there's a lot of questions about whether, if the Fed creates a recession, is that a policy error? I don't know. I think maybe that's well within their rights or well within their mandate.
Yeah, and it's certainly been used in the playbook in the past. Matt Rao, great stuff, Executive Director at Nomura. Thanks for joining us for Options Insight today. And from New York, this is Bloomberg.